Over the last few weeks, we have seen blockchain networks aggressively push toward more development. Solana in particular has been quite active in that regard, and its latest announcement highlights its move to explore opportunities. Solana is reportedly looking for growth opportunities in the synthetic assets segment. The network recently announced that it has published an open source reference implementation to facilitate its efforts towards synthetic assets. This constitutes an open invitation to developers who might be interested in launching those types of assets with a low-friction approach. One more sheet of you, a DeFi developer. Solana Labs has published an open-source reference implementation that developers can use to launch their own synthetic assets platform. We're interested in supporting report developers who may want to build on top of this contract. Solana Labs, September 25th. 2023, while Solana has expressed interest in supporting developers to achieve that goal, the announcement has multiple facades. For starters, the open source nature of the endeavor may facilitate more developer interest in Solana, an outcome that could potentially turbocharge Solana's ecosystem growth and development. And data on Token Terminal revealed that Solana's core development count has been declining for the last 3 months. Network earnings dipped to their lowest point in June based on a 6-month timeline. On the other hand, the development could put Solana on regulators' radar. This is because synthetic assets, especially in tokenized form, have previously faced regulatory pressure. As such, it should be interesting to see how Solana will overcome such challenges. And there's no doubt that Solana's TVL has underperformed since its historic peak. Meanwhile, numerous projects have overtaken its TVL. However, the underlying mechanisms that underpin most tokenization strategies on other networks and protocols often involve liquidity. In most cases, tokenized assets are collateralized. If that is the case with Solana, then its TVL might recover faster. Nevertheless, Solana's TVL did manage to resume some upside so far this year compared to its YTD lows. According to DeFilima, the network had as low as $210 and $8 million in TVL on the 1st of January. Its current TVL at the time of writing was $313 and $27 million. Despite the relatively slight but noteworthy TVL growth, the volume underperformed and appeared lower than it was at the start of the year. This was with the expectation of large spikes every now and then. Perhaps a testament to the uncertainty that prevailed more recently. The slight recovery in Solana's TVL suggested that the network might require a change of tactic to embark on recovery. The open source invitation to developers to build tokenized assets might turn the tide for Solana.